In this presentation, we're going to record a receive payment on an invoice with the use of bank feeds. In other words, we see a deposit that's coming through with the bank feeds. We're going to imagine how we would set that deposit up to tie into an invoice if we needed to go through the invoicing process, increasing the accounts receivable and increasing sales at the point of the invoice, the deposit then happening at some future point in time when the payment is received. Here we go with Xero. Here we are in our Triple G dashboard. We're going to be starting off by opening up our financial statements, going to the accounting dropdown. We're going to open up the balance sheet. Then we're going to go back up top. We're going to duplicate that tab, right-clicking on it and duplicating it. We do need the income statement this time, so we're going to go back to the first tab and we're going to then open up the income statement, go into the accounting dropdown and on down to that income statement. Once that income statement opens up, we will be duplicating it by going to the tab up top, mousing over it, right-clicking on it, and duplicating that tab. Then we're going to open up the reconciliation report, back to the first tab to do so. Accounting dropdown, we're in the reports. That's going to be the second item under the accounting dropdown. We're going to go down to the accounting section within it and choose the bank reconciliation summary report, bank reconciliation summary. Then I'm going to right-click on that tab up top and duplicate that tab. Then we'll go back over to the balance sheet and we'll be adjusting our dates now, and we're going to select the drop down for the dates, bring this on up to April. That's the month we're working in, April 31st, and update that report. Then we'll go to the income statement and check out those dates. I just want to change the beginning date now to the beginning of April, so we'll bring that on up to the beginning of April, and we don't have anything after April, so we don't need to change the end date. Then we'll go to the bank reconciliation, and we're going to change the date here, and we're going to make that to Chase, and make this as of April, the end of April as well, the end of April, and update that report. Then we're going to go to the first tab, and we're going to go to the accounting dropdown, and we're going to look for our banking information. Back to the bank account information, and we want to then be looking, of course, at these last four items that we have to reconcile. So these are the reconciling items that we will be considering at this time. We're now moving and shifting our attention to the deposit side of things. I'm going to then hold down Control and scroll up a little bit to get up to that 125%. So we're at the 125%. Now we're going to look at this first deposit. We're going to assume that's from an invoice. So we got an invoice first and then the deposit. To think about this, let's look at our flow chart. We're going to go back on over to our flow chart. This is in the QuickBooks desktop, and we're just looking at it so we can see the flow chart here. So they got a nice little flow chart. So if we're in the customer section. Now, the typical flow of the flow chart would be, the long flow would be that we have an invoice that would increase accounts receivable, the other side recording sales at the point of the invoice. Then we would receive the payment, and then if we have to group that payment in some way to record the deposit, then we would basically record the deposit. Now, in the prior month, we said, how can we simplify this? If we're on a system where we don't need accounts receivable, we don't need to invoice. If we're in the type of industry where we don't have inventory and we don't need to invoice, but we just need to record the deposits at the point in time they clear the bank, then perfect system for the bank feeds on a cash basis. We can just, not deal with all that, and just when we have the deposit at the end of the system, we just make the deposit. However, if we do need to track accounts receivable, if we need to enter the invoice, if I have to actually send an invoice to somebody and then wait for them to pay us, and I want to track who owes us money, question then is, this is a non-cash transaction. How can I fit that into our process here? Because this needs to be tied out to the bank feed thing that's going to happen, which is going to be over here in terms of the deposit. So this is going to be a deviation. If we need to do that, we need to deviate in this point. This is one of the major points that many companies need to deviate so that we can tie the invoice that we need to make in order for us to do our billing process and track us who owes us money to the deposit that we're going to see later, which we might wait to see it clear and then match up those two things once it clears the bank, which we'll see in the bank feeds. So let's think about, first, we're going to try this out. We'll say, hey, what happens if we just make an invoice, and will we be able to tie that out to the deposit? So let's try that. We're going to say, all right, let's pretend we had an invoice in the system. I'm going to make an invoice in the system and see how we could then tie that out to this deposit that we have seen. This deposit should match up in a couple different ways. One way, at least, by the dollar amount. That might be the only way. So we have a dollar amount of the $996.45. If we had an invoice that was outstanding for that same amount, then it might just take that one piece of data and be able to tie it out just based on that one thing. And So now what we're going to do is we're going to make an invoice and see if Xero then picks up that invoice based on the deposit amount. Note that this would typically happen in the flow process before this clears the bank feed. We're imagining this would happen in the past. We would make an invoice that would then increase the accounts receivable, and then we'd have the deposit happening at a later time that we would match out to it. To do this, I'm going to go back up top. I'm going to right click on the tab up top and make another duplicate of this so we can have another worksheet tab. So I'm going to duplicate this tab. I'm going to go back to the tab to the left, then we're going to make an invoice. I'm going to go back up to this little plus button up top, and we're going to make an invoice. I'm going to hit the drop down, we'll say invoice. Now we're going to have a client. I'm just going to add a client, Adam. I'm going to add, not our employee, I'll just say Adam is going to be our customer. I'm going to say that this happened. We could say, let's keep this in the same month. So I'm going to select the drop down. Let's say it's happening in April 1st. So this is the invoice happening in April 1st that we're later going to receive payment on it. I'm going to say the due date, I'll say is May. So let's say that's May 1st for the due date. And now the items, now I'm not going to set up the inventory items. You could set up the inventory items here or service items that you would have. I'm not going to go into the process of setting up items here. I just want to match out the invoice. And then I'm going to say that this is going to be 1. And I'm going to say that I'm just going to give the full amount, which is 996.45. And that's going to be the full amount. Now, note that if you're dealing with sales tax, you could add the sales tax here when you do the invoice and record the sales tax on it. Obviously, if you had the sales tax, it would be included here. And then when you get payment, the payment would then include the sales tax portion that would be included in the price. Now, when we record this, what's going to happen? It's going to be increasing the accounts receivable because it's an invoice. The other side is going to be going to the sales, in our case, a revenue type of account, a sales type of account. And if you had inventory and you were tracking inventory, it would also be recording the inventory account decreasing. However, we're not doing any inventory here. We're only recording the sales side of things with the invoice. So I'm going to go ahead and approve this. And it wouldn't let me approve it. I need a description. They're going to make me have a description. And then I need the other account, which is going to be a sales account. So I'm going to put it to sales, which is like the default income account. So I could put it to sales, or I might want to put it to, I think we've been putting them to merchandise. So I could put it to merchandise, even though I'm not recording sales tax on it. And I'm not going to record any sales tax because it's just kind of a practice problem here. If you had sales tax, then you could apply that out. I just want the dollar amount to tie out. So then I'm going to say approve and see if it lets me record it this time. There it is. We are successful. We're successful. We're going to go into the balance sheet now. If I go up to the balance sheet and update that, then what's going to happen? Now we're going to have an accounts receivable show up here. And note, I had mine on March, so you have to be up through April 30th to have the accounts receivable. So make sure you're on April 30th, and then you've got the accounts receivable. So that's the AR. This is an accrual account. So this account is an accrual account. It's on an accrual basis. On the income statement, the revenue is going to be recorded even though the cash hasn't been received at the point in time we made the invoice. So now we're going to say, okay, now I'm going to wait until it clears the bank to whatever payment we had. If we're collecting payments, we're just going to put those payments in the bank. We're not recording the received payment then, as would typically be the next step. Say I'm not recording the receiving payment. I'm just going to wait till the payment clears the bank and see if we can then match that out to the invoice. So to do that, let's go back to the reconciliation tab. Here we are, there's the 996. It's suggesting owner right now. Let's see if I refresh the screen, if it could pick up the dollar amount for the invoice. So I'm gonna refresh the screen, and you'll note that it did it here, right? So there's the 996, here's the match. Now it's not going to create anymore. It says, hey, there's an invoice open that happens to be for that same dollar amount. And again, notice that's the only thing it's picking this up from. It's picking up the dollar amount to match it out. It says, hey, there's an invoice, here's the invoice. It looks like it matches out. And this is true, this is actually the one we want here. If it were not the one we want, then of course we could still go through our item to create a transaction, or we can find the match by using the find item over here. We'll talk about that in a future presentation. Now note, even though it says match here, it's matching up to an invoice. So if I match a deposit, which is on the bank side, to an invoice, then it is matching it. It's matching the deposit to the invoice, but it's also going to be creating the deposit. What's that going to do? It's going to decrease the accounts receivable, and it's going to record the increase in the cash account. So it is a matching transaction, but just be careful here because it's not like it's a matching a deposit. If it found another deposit and I was matching deposit to deposit, then it would just simply not duplicate the deposit. It would say, okay, that deposit is already made. This is matching a deposit to an invoice, which is saying, hey, I'm tying this out to the invoice and recording a transaction, that transaction decreasing the receivable and recording the amount to the bank account. So I'm going to say okay, and we'll record that out and check it out. We're going to go to the balance sheet then, and let's update the balance sheet and update. And then if we scroll back down, notice the accounts receivable has now disappeared. So it's now gone because now we've received the payment on it. And then if we go into the checking account, we're going to see the deposit that has been created from, from that transaction. And that deposit was for, down here, where is that deposit? It's going to be that 996.45. Then if I go back, then on the income statement, if we go into the income statement, we do have the income as recorded in the income statement. If I update the income statement, let's update the income statement. So there's the income being recorded. However, it's not being recorded with the deposit. It's being recorded at the point in time of the invoice. So just note there's a timing difference. If that invoice had been made like in the prior month and we didn't deposit it until this month, there would be no amount here in April, right? It would have been in March. So this is here, and you can see it, the received payment item up top, and then we have the invoice. So this is being recorded by the invoice. If I go into this item, then you'll see the invoice of the transaction. That's when normally it would be recorded on an accrual basis, which is basically the default basis we will have for the accounting system. I'm going to go back, and then I'm going to go back, and then I'm going to go to the bank reconciliation. So if we take a look at the bank reconciliation, once I redo this 16659 is going to then change to what is on the balance sheet, which is now the 167,595.58. So let's do that. And then what's going to happen is that deposit's going to disappear. So I'm going to update this. And let's see if that is indeed what does happen. So 167,595.58 deposit disappears. Then we're going to go back to the bank reconciliation tab, and let's take a look at the bank statement. Within the bank statement, we already had this deposit in place because we downloaded it from the bank, but now it should be reconciled. So this is going to be a receive money. So the receive money was that, there it is, and it's reconciled. And then on the account transaction, we have added the transaction. So again, it didn't match it in that as if the transaction was already there. It matched it to the invoice, and it created a transaction here for the deposit. So the deposit there, this wasn't there before. It matched it to the invoice, but now it's recorded as a deposit to the bank, and of course reconciled at the same time. So next time, you might say, well, that works great, but however, what happens if we, have multiple deposits that we put into the bank from invoices that we received? In other words, if we go to this flowchart, we had an invoice that we kind of just waited till the deposit cleared and then tied it out. What if I had a couple invoices that I then grouped together and then deposited into the bank? Well, then it's going to be more difficult to tie out to the invoice. So note, if you have the invoice, it might be beneficial to record the received payment, then record the deposit in the format that you expect to be received on the bank statement. And then when you do the match, all you're doing is matching deposit to deposit. In other words, you'll basically be on a full accrual basis for the receivable cycle. Because otherwise, and we'll take a look at this next time, if you have the invoice and then you wait for it to be deposited, and you have a couple deposits or a couple invoices, you got money from a few different sources that you deposited in the bank at the same time, it's going to show up on the bank side as grouped together, and then you're going to have to figure out which grouping is going to tie out to the invoice. It's going to possibly have multiple invoices that resulted in that one deposit. That's going to make your reconciliation more difficult. So if that is the case, then you might be better off just doing the full service here and saying, okay, I'm going to record an invoice, then record the receipt of payment on it, tracking the receivable, and then actually group the deposit as I expect it to be seen on the bank statement, and then I can just match it out to the bank transactions, to the bank feeds at the end of the day. So we'll take a look at a situation where we have that problem, where multiple invoices are going to result in one deposit, how we can match that out. But that's it for now. Let's get out of here.